Ladies and gentlemen, Greg Mikulowski from ForexLive.com. Today's date is June 13, 2024. This is the Kickstart video. The Kickstart video, take a look at three of the major currency pairs, the euro versus US dollar, dollar versus yen, and sterling versus US dollar from a technical perspective. There's a lot of fundamental news coming out over the last few days. PPI came in much weaker than expectations this morning. Initial claims rose, which is a weaker jobs picture as well. That has the US dollar moving a little bit to the downside. Then stocks moved higher initially, but then came off. US yields are now lower after being higher earlier in the day. That comes after the Fed decision yesterday, which was more of a hawkish no change, with the Fed only projecting one rate cut between now and the end of the year. Is that obsolete already? Finally, the CPI data yesterday came in much weaker than, or weaker than expected. We won't say much weaker. It was about 0.1, but it was on the weak side for the CPI for the second consecutive month, which is three tame numbers in a row to get the Fed to cut rates. So we'll see. But anyway, let's take a look at the technicals that are driving the markets. We'll start by taking a look at the euro versus US dollar. I'll look at the hourly chart here, and the reason why I want to look at the hourly chart is I want to look at all these moving averages through here. This is the lowest of one of the four, with the 100-hour moving average at 1.0776. The 200-hour moving average is the higher of the moving averages. That comes in at 1.0828. In between, we have the 100-day moving average at 1.0802, and the 200-day moving average at 1.07856. Those moving averages are sort of providing the bands, if you will, for more bearish below, more bullish above, and in between, more neutral. Yesterday, the price did move above the 200-hour moving average. That was off of the CPI data, but then the Fed decision pushed the price back down, and we came right back down to the 100-day moving average. Price tried to hold that 100-day moving average in the Asian session to the European session, but then gave way to the downside, forcing the price down toward the 200-day moving average, our next target, and then the 100-hour moving average, where support buyers came in. And of course, we had the PPI data and initial jobs claims push the US dollar back to the downside here, the euro higher, and that took the price back higher above the 100-day moving average. But now we've rotated back to the downside. Also in play, I guess, is the 50% retracement of the most recent trading range from our high price that we saw in the month of June right here to the low price in the month of June right here. That 50% retracement comes in at 1.08187. It sounds like there's levels at every, along the whole way right here. And when the market's is unsure with this counterbalancing Fed tighter than expected or more hawkish, or data weaker, however, what is the Fed to do? The market will tend to kind of get confused itself and trading between the extremes. But so we do have these bookends as our support and resistance level with the hourly moving averages, and we'll just see how the flows take us going forward. And it may just be just on a whim here and there, where the price moves to one extreme to the other. But ultimately, we're going to be looking for a break either to the upside or downside with momentum on the break. Use those two hourly moving averages as a barometer for more bullish above, more bearish below. Let's take a look at the dollar versus yen next. And in trading yesterday, we did see the dollar versus yen move sharply to the downside off of the CPI data, and then rotate sharply to the upside, but not quite as much as the decline off of the FOMC rate decision. We moved back up toward the 100-hour moving average, and in trading here today, the price stayed more to the upside of that moving average, and moved back toward this swing area. This swing area is going to be a key area in my book from a technical perspective. This had a number of different swing highs. The last high rate here prior to the CPI data came up short of the swing area between 157.40, 157.46. You can add this high at 157.38 as another level. So this area right here is going to be key. If the price can get above that level, that would be more bullish for the dollar versus the yen. But as long as the price remains below that level, the sellers are still in play. Now we did see the price move below the 100-hour moving average off of the data this morning, but this swing area down through here, which again is, well, not again, but which is also a level of significance. You can see the number of different times that the price either found support, especially through here. We did have one little break right here, but that was quickly reversed, and we used that level as a support right through here. And then we fell below the level, and you can see how it sort of used that area as a ceiling here, and then moved above it, making it a floor before moving again below it yesterday. But so far in the Asian session and now in the New York session, this area has found support. So if like the euro, we have a swing area above or a moving average above and a moving average below. In the case of the dollar versus yen, we have a swing area above and a swing area below, which is seems to be defining the support and resistance in trading here today. There are other levels that we have to pay attention to, especially this 200-hour moving average. That's this green line right here, and perhaps the 38.2% retracement of that move to the upside as well, that we have to get below. If we break below this 156.52 to 57 level on the downside. In between this extreme and this swing area, and this swing area is a 100-hour moving average, comes in 156.92, and as you can see, we're trading just above that level now as the buyers come back into the market after the weaker data today. Finally, let's take a look at the sterling versus the U.S. dollar, and this case we're going to look at the 4-hour chart. I sort of redid, a swing area here. Yeah, the swing areas have been shifting as the market kind of tries to figure out what it wants to do. There are a couple of things that I see in this chart. Let's look at the bottoms that we're seeing here, in particular this floor right through here, where we had a number of different swing lows. It's pretty solid right there, and I like the fact that we came down toward that swing area here, found early buyers here, suggesting that buyers were in control. In this case in trading earlier this week, the price came a little bit below that prior low, but found again support against the high of the swing area. So 126.74 to 85 is a key level on the downside. Now, we have moved away from that and trade above things like the 100-bar moving average of the 4-hour chart. That's what comes in at 127.49. And I outline another swing area here, which has my interest. It's a little bit more choppy around this area, but there's a number of different swing lows and swing lows that came within this area, and it's some swing highs as well that came within this area, and our low price in trading here today did find support buyers against that level. We are now above that level, so the buyers are probably a little bit more in control. You can see we have lower highs or lower lows, and we have higher highs, which gives us that little bias. We're seeing the 100-bar moving average of the 4-hour chart move to the upside as well. That's somewhat positive for this as well. Finally, I'm going to just switch over to the hourly chart, because it's interesting off the hourly chart as well that the price low in trading here today, this is the same swing area that we looked at off the 4-hour chart, but the low price in trading here today did find support buyers against the 200-hour moving average. So that's another positive here for the sterling versus U.S. dollar, keeping the buyers a little bit more well in play and in control, being above those levels. So we're seeing up and down price action as a result of all the news that we've had over the last 24 hours, and that's not unusual. It's a matter of finding your spots, picking your spots, being patient, understanding, that maybe it's a time to take profit if the price moves higher, or take profits if the price moves lower and you're short. Just be aware, be prepared. But that's my take from a technical perspective of these three major currency pairs. My name is Greg Michalowski. Good fortune to trading. Bye-bye now.